10-year note yields continue to be held to range-bound trade. Recall we've got through the old high at 312. We made a new high at 325, and since then we've been kind of hanging in the middle somewhere between the levels of the low 320s and the mid 3-teens. Today settling between 319 and 320, just right at the midpoint. It seems that the market is really coiling, waiting for that next it moment, and a breakout trade could be lurking somewhere soon, I think, based on where we're seeing this trade, unless we continue to trade right around 320. I think the market's going to see a breakup north of 325 or back below 312 and give us some kind of momentum, because right now we are still continuing to coil. So the market technically looking for a breakout, needs a catalyst reason. We'll get to that in a moment. If we look at market volatility, modestly up after ending last week lower. So we saw a modest uptick. I think it goes hand in hand with the fact that, yes, while we have held this new range, the market is becoming very, very, eerily sort of waiting for something to happen. We've had some news on the outskirts, which has moved the market, within maybe 3 to 5 basis points from one side to the other, but it really isn't seeing a whole lot of momentum. The market seems very calm. The waters are very calm in the bond market right now, despite what we're seeing in equities with earnings, despite what we're hearing out of Europe, despite some of the other trade talk we're getting. And right now, it just seems volatility upticking goes hand in hand with the idea that something is lurking. And what could it be? Well, I think first and foremost, Friday's number, advanced third quarter GDP. That could be one of the it numbers. It comes in through the roof. We get a 4+% GDP number. I think it takes us through 3.25 to the upside in yield. Likewise, if we get something a little bit weaker than expected or a lot weaker than expected, we could see bond yields return back below 312. So I think that could be our first catalyst it moment. Following week, we have G20, followed by the U.S. midterm elections, followed by FOMC in the same week. So there are some big moments coming up in the bond market. And the fact that we moved so quickly, it took so little time to get from 312 to 325 after taking forever to get to 312, suggests that the market may be tired. It's waiting for confirmation, and I think that's good. We're seeing equities kind of see pullbacks and seen bounces. We've seen commodity prices do the same thing, but the bond market is really, it's been steady Eddie, holding in ranges, breaking out of those ranges, holding again. And right now we're seeing that pattern continue. But I think at this point, Friday's advanced third quarter GDP number, if it is not on the screws, could see the market move. That could be the first it moment of several coming up in the near future. This is Todd Colvin coming to you from the floor of the CME Group.